Welcome back. Well, quiet for the market. So let's continue talking about what's trending today on Halftime Report, and that's hospital stocks. We spoke about the valuations, we spoke about the triggers, but to discuss more, we have Aditya Khemka, who's the fund manager in InCred Asset Management, who's with us this afternoon. Aditya, hi, welcome to the show, and good to see you in. A lot of the hospital stocks are buzzing today. Just give us a sense in terms of what you made of the earnings this time.
Good afternoon, and thanks for having me on the show. So I think, look, hospital stocks had reported in line to slightly better than expected earnings, and actually, I couldn't really understand why hospital stocks were down for the past 2 months, because generally, stocks fall in anticipation of a poor quarter or poor earning growth, but that was just not the case. And now that the hospital stocks all have delivered decent earnings, I think the stocks are just reverting to their mean valuations. So I didn't find anything extraordinarily good or bad in the current quarter.
Okay, Aditya, you didn't find anything extraordinary in terms of good or bad during the quarter. But then, what is your view now from here on? What is your pecking order when it comes to these hospital stocks then?
So we don't really comment on each and every hospital stock that's listed, but I can comment on the 3 stocks we own in the PMS that I run. So at the InCred Healthcare PMS, we own our largest weight is a hospital company called Healthcare Global. That's a super specialty oncology hospital chain. Our second largest holding is a hospital based out of Gurgaon, Delhi NCR, that's Artemis. And our third position within hospitals is Rainbow Hospitals. They do maternity and mother care.
Okay. Well, you're not looking at multi-speciality as much as you're looking at specific, genres of hospitals. Is that correct?
Yeah, that's actually correct. If you look at the global hospital ecosystem, or if you look at the global markets, each and every market, when they begin their healthcare journey, they begin with multi-specialties. But as the markets mature, as the markets actually start gaining more traction in terms of ARPOBs, in terms of patient footfalls, the market eventually evolves into super specialties, where super specialties are looked at as better quality of care, more high tech, more advanced care, basically. And patients are willing to pay a premium for better quality of care. So we think India is at that point where multi-specialty hospitals are there for most of us to access, at least in the urban areas, and hence the demand for super specialty is growing faster. Mm-hmm. And hence our presence is more in super specialty than in multi-specialty.
Okay. Well, interestingly, Aditya, a couple of the companies, Apollo, Max, mentioned that they've reached an agreement with the insurance companies because they had seen that disruption with regards to cashless services. So that seems to be settled now. How much of a trigger do you think that is for hospital companies? Was that an overhang?
Maybe in terms of narrative and rhetoric, yes. But in terms of patient footfall, no. Because remember, while cashless insurance was cancelled, insurance was still paying if you submitted the bills for reimbursement, right? So if you think of it from a patient perspective, just because I'm not getting cashless was not a good enough reason for me to avoid a surgery. So I would still go for the surgery, pay the bill out of pocket, and then apply for insurance reimbursement. So I don't think it caused any disruption in financials or footfalls. But yes, the narrative and the rhetoric had sort of gone against the hospital stocks. People were feeling that there will be price corrections, there will be negotiations with packages, with insurance companies, which is anyways an ongoing, business practice. Insurance companies keep renegotiating package prices with hospitals on a one-on-one basis. So that had no operational impact, but a narrative impact, yes.
Sure. Aditya, there's another important trigger that comes in for the sector is that CGHS, the rate revision, which happened in October, around 2,000 medical procedures, we saw this revision, right? And Max even spoke about that, saying that rate revision has actually added around 200 crores positively to their EBITDA. With these revisions, could we expect this to continue for hospitals, more benefits coming here now?
I don't know about more benefits, but obviously the CGHS revision is positive. Look, CGHS rates were last revised in 2015, and then they got revised now in 2026. So you can see that over a 10-year period, they have been revised by like 60-70%, and that too, not all procedures, some procedures. So you can understand, how much behind the rates were as they were, before this revision, and that obviously is helping the companies that have a significant sort of patient pool which comes with CGHS cards. And that is where, your Delhi NCR hospitals actually have more CGHS, ECHS patients compared to other hospital chains, which are maybe not so focused on out of Delhi NCR. So if you look at how we are positioned in our portfolio, we have Artemis Medicare, which is a completely Delhi NCR based play. And this is one of the reasons, the CGHS is one of the reasons why we believe the company will do well in the near future.
Okay, interesting. Well, Aditya, we need to leave it on that note, but always interesting to get your thoughts in on the healthcare as well as the pharmaceutical space. Thanks very much for joining in and talking to us. So that's the view coming in on healthcare stocks, which are really buzzing in today's trading session. We'll do one thing. We'll take a short break. But up next, Jay Thakkar of ICICI Securities will join in with some of his trading calls. So full tilt back on the market. Stay tuned.